Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. This video, I want to go over the ES strangle that I recently did, which was a really low delta one, a 0.02 delta ES strangle. I'm going to go over what a strangle is, when I took profits, what the return is, and why this might be one of my go-to strategies. As always, please like, subscribe, smash that button, all that good stuff does help out the channel. Appreciate all your support, and let's get right to it. All right, in this video, we're going to go over how to set up and manage an ES strangle using a relatively smaller account size. To actually set up this particular strangle I did was about $4,000. You should have a little bit higher, maybe around $5,000, because of span margin making it a little bit more expensive as it goes against you. Typically, you want to do this with MES, but I was able to do this off an ES strangle with a relatively small account size, and there are some benefits to doing this with ES over MES as well. So first, what is a strangle? A strangle is when you sell a naked put and a naked call at the same time. It's a lot like an iron condor, but we're not buying any of the options. We're just simply selling the put and selling the call. You do make premium in both directions, so you're actually getting premium twice, and it is pretty capital efficient. It's not going to necessarily be double the amount of buying power needed to do a strangle compared to just a naked put. One side would be guaranteed to work in your favor if you let them go to expiration. Obviously, you can't go all the way to the call side or all the way to the put side at the exact same time and the same expiration date. Here's some of the benefits to doing ES instead of MES for your strangles. It does have a higher multiplier. It's a 50 multiplier of your premium compared to just a 5 multiplier for MES. So if you take in a premium of, say, 10, you do 10 times 50 or make $500 in premium there. If you did it with MES, it would be 10 times 5 or $50. The commissions are only slightly more on an ES compared to MES, but that's beneficial because if you did 10 MES contracts, it's going to be one MES times 10 in commissions, which will be much higher than just one ES contract for the commission scale. There is, in general, more volume and open interest with the ES strangles, so you might get slightly better fills, and the bid-ask spread won't necessarily hurt as much. But that's not always going to happen, but I do see that tend to happen quite frequently. So here's how I set up my strangle on the end of November. ES was at 40.46. It happened about 30 minutes after the Fed meeting. Market was going up. Decided to enter a very, very low delta, 0.02 delta strangle on ES, where I sold a 3,300 put and a 44.50 call, and it was a 30 DTE at the time, expiring in the end of December. So you can see here, 11:30, it was a little after the Fed minutes, filled it for 3.7 in premium. 3.7 times 50 is almost $200 in premium. As you can see, a little bit of foreshadowing here. I did end up closing in at 1.9, and that happened on Friday this week. Here was MES at the time. I entered at this little arrow here. The market did continue to go up that day. It was a really big up day in the market during that Fed meeting at 11:30, and I was slightly negative on this position in the end of the day. However, there was quite a few down days in a row. This is the daily chart. We actually had 5 down days in a row and was able to close it out pretty much around here on that Friday afternoon at near a 50% profit. It only took 9 days to do so, and it was a 30-day expiration. So again, I was going to take profit at either 50% profit, which is 1.9, or I would have stopped out at a pretty close stop out with a smaller account size. I'm going to stop out at 5.4. The reason for this is I don't want to be using up a ton in span margin if it goes against us really strongly. It is a relatively conservative stop out where it could happen relatively frequently. However, with the really low delta, 0.02 delta there, it was not very high chance of happening. And once it started to decay, it was in the low twos for a few days. We could have even closed it there for a good profit, but I was waiting for the 50%. So again, it closed it in 1.99 days. 1.9 was the difference of how much I took in to how much we sold it for. So 1.9 times 50 multiplier was a $95 return. And it took about $5,000 in buying power. You could divide those two numbers out, get about 2% return in a little less than 2 weeks, and it was a 0.02 delta. So pretty much about 1% in a week, which is a good return. Definitely not going to be upset by getting 1% a week. My main goal is about 0.5% a week. And it was a very low delta, so pretty high probability chance that this trade was going to work out. All right, so some of the main takeaways from this video is if you're going to do this with a small account size, make sure you have a pretty tight stop out. You don't want to let this get too far against you and getting close to in the money, or you could get margin called on it. So a very tight stop would be very helpful here. I would recommend doing this with MES if you have a small account size of $5,000 or less. You don't want to be using your whole account on one contract here. I've been doing this on the small account challenge with the $10,000 account. We already brought it up to a little over 12,000 in 2 months. So it's been a really good returns when I'm only aiming for 2%. It's made about 10% in the month. So what we're going to do is reset the account size. I'm going to be taking that $2,000 profit and just putting it into VTI. That's the total US stock market. And I'm just showing this for other members on how to grow a small account size consistently. Obviously, if it's growing pretty well, you could scale up appropriately based on your buying power. But I just want to show what my positions would look like with a $10,000 account. So if you're interested in seeing exactly what I would do with a $10,000 account using futures, we're going to be using these low delta strangles, also use covered strangles on MES, ES, and occasionally we'll throw in some oil and gold futures. Feel free to join the Theta Traders Inner Circle membership for annual and lifetime. You'll be able to see every trade that I do, exactly when I do it, the reasoning behind it, and it's a one-on-one. You can easily chat with me. You can also chat with other like-minded individuals. We're at about 90 members right now, so there's people of all levels, beginners, intermediates, advanced people as well. So if you're interested, again, join that Theta Traders, and I'll see you on the Discord. Everyone have a good rest of the weekend, and be nice out there, trade well, and I'll see you guys next time.